So we also need to talk about tax credits. Tax credits are applied after the tax calculation. In some cases, the amount of tax credits will be greater than the amount of your tax bill. If this happens, one of two outcomes can happen. The tax credits are refundable. Then you'll receive the excess credit back from the government. That very seldom happens. If the tax credits are non-refundable, then you'll not get any benefit from the excess tax credit. However, if you manage to get a tax credit that zeroes you down, it does mean that you don't pay anything on your taxes, which is nice, I gotta say. So let's look at some cases. Determine the final tax owed in the following situations. Cruz has calculated federal tax of $6,520, has no children, but has a non-refundable energy tax credit of $1,390. Will he get a refund of, or will he owe? So currently, he has federal tax of this much. So he has a tax credit of $1,390 that we can subtract off for his credit because he gets all that off. So when we do that, we end up with $5,130 that he is going to owe still. But it's less money that he owes, so that's good. Blake calculates $2,500 in owed tax. He has a non-refundable tax credit of $3,200 for solar panels. Blake will get a refund, or will he owe? Neither. Technically, he'll get a refund of $0. Son has a calculated tax credit of this much calculated tax of that much with that much in refundable tax credits for dependent children. Son will get a refund of, so we get to subtract the $7,200 from the $5,600 and see that she will get a refund, or he will get a refund of $1,600. Tax credits and deductions. Tax credits and tax deductions may sound similar, but they are very different. A tax deduction reduces your taxable income by the amount of the deduction before. It is a percent of the amount of the deduction. A percent of the amount of the deduction. You don't get the whole deduction. In a standard deduction, you get that amount off, but you end up taking a percentage of it. You don't get the whole stuff because they end up doing percentages later on when they're figuring out your taxes. So it's a percent of that amount. A tax credit reduces your total tax bill by the amount of the credit after the charge. That's why it matters. You get a percent of the amount of the deduction, but you get the total amount off your tax bill in a tax credit. For example, Midori and Tremaine are in the 24% tax bracket. They file jointly and take the standard deduction. How much will their tax bill be reduced if they qualify for a $500 refundable tax credit? So if it's a $500 tax credit, it will be reduced $500. How much will it be reduced by a $500 tax deductible expense? That means you take the $500 and you multiply it by 0.24, and you get that they only get $120 off of their tax bill. Not being reduced by $500, just $120. That's the difference between a tax credit and a tax deduction. Rosalind is single in the 12% bracket and itemized deductions. How much will her tax bill be reduced if she qualifies for a $3,000 refundable tax credit or $3,000 times 0.12, which is $360 off. That's the difference between a tax credit and a tax deduction. So you want to take the credit if you can. You have to make sure that you can.